Well, good morning, good afternoon, or good evening, depending on when you might be watching this video. Matt Pfeiffer here, and for compliance purposes, mortgage lender NMLS ID 296861, proudly representing Leader One Financial. Wanted to share a couple of thoughts that I had, and this is not pre-scripted or anything that's really planned out very much, but just in light of media headlines, I felt compelled to just share some thoughts with you today. So we are at a moment, and as of the time of this recording, it is near the end of March 2026. In light of some of the actions taking place overseas in the Middle East, there's been some movement in terms of how mortgage-backed securities are trading and what's going on with interest rates. It wasn't that long ago that we were sitting at levels that were, as good as we've seen in the last 3+ years. And that's not so much the case right now. But as a lender for the last 30 years, it's interesting to me when you look at the way the media conveys information. Now, I'm a consumer just like you are. Yes, I lend money for a living. So I know a lot about the mortgage industry, and more so than your average citizen out there. But with that being said, dollars add up and dollars matter in every household, regardless of what you do for a living, how much money you make, how little money you make, what your obligations are, what your housing cost is. All those things matter to every individual, maybe some more so than others. But the media, I am signed up to where I get mortgage headline news sent to me every day. And there may be many of you out there that are aware of this feature through Google. There may be some of you watching this that don't realize this, but if there's a topic or an industry or something that is of interest to you, you can go into Google and you can tell the system that you want to be notified every day about all the headlines pertaining to that particular item. So being that I'm in the lending space, man, is it just an absolutely beautiful day out here. Welcome to Southwest Florida. If you do not live in Southwest Florida, but you would like to, check out my other channel. I have a channel dedicated to what life is like in Southwest Florida. I just don't know of anywhere else in the country that I would want to live and call my home. This is just absolutely fantastic here. But back to the topic of point at the moment. I'm going to pause for a minute because the wind's picking up. All right, so I don't know if this is the best angle as far as lighting, but I'm trying to shelter the microphone from the breeze right at the moment. But in regard to the headlines that I see, so I get this email every day from Google, and there's 12 to 18 headlines from all the major news outlets out there. And I'm not picking on anyone in particular. I'm not going to throw any names out there because it is a wide variety. And it's just one of the things that I look at on a daily basis as a part of my occupational space. But the headlines, I just, for weeks now, I've been just sitting here watching the headlines, and I just felt compelled to share some thoughts here and kind of tying back to what my thought was a moment ago regarding being a consumer myself. I am an end user in society for every product, good, and service that is not a mortgage, because I'm just like you. And in that regard, when we make a mortgage payment, when we pay an auto loan payment, when we make a payment on a credit card, there is a dollar sign that is associated with that payment leaving your household or your checking account. There's not a percentage symbol associated with that. Now, while the percentage is important in terms of whatever debt you may be talking about, the percentage itself is so often such a driving and primary focal point. And again, as a consumer myself, I completely understand that when you're analyzing financing options for whatever it may be that you're financing, whether it's a motor home or a boat or a house, what you're paying if you need to borrow money to accomplish that is very important. But the way the headlines read, the drama, and obviously we all know getting eyeballs onto a network or a platform or a channel or an app is ultimately the driving motivation of anybody in the public space out there in terms of putting out anything that you want people to see. So I get that. I fully appreciate that. But the way the wording and the headlining has been on some of the recent movement regarding mortgage rates while we're dealing with uncertainties in the Middle East, you know, petroleum and oil flow channels and everything else, I get it. The mortgage market, just like the stock market, just like cryptocurrency, just like anything else, moves in cycles. We might be on a favorable, uptrend in the stock market. We might be on a favorable downtrend in the mortgage market, but it never moves in a straight line, or I should say very, very rarely. It always looks like an escalator, whether it's going up or whether it's going down. There's going to be spikes, there's going to be valleys. But my point on what I wanted to share is the headlines that I saw when mortgage interest rates on a national average for, a very well qualified client moved from the upper fives to the low sixes. The headlines that I saw out there just really had me shaking my head. Over time, when you're dealing with a mortgage, your interest rate is very important, obviously, because it is a very long-term debt. So if you're taking out a 3-year loan on your vehicle, the interest rate is not quite as critical because the debt's going to be paid off in 3 years. But when you're talking about a debt that's going to last 15 or 20 or 30 years, the long-term impact of the interest rate associated with your financing does come into play, and it is very important. But to get to my point here, the difference, and I'm not quoting any rates for any given scenario, I am not quoting any APRs, I'm not taking into account the rest of the picture. I am just talking simple numbers that you can go on to any mortgage calculator online and you're going to get the same numbers that I'm about to share with you. But my point on this is, if you look at 2026 here and the average loan amount that people are acquiring to purchase a home here in 2026, it is around $385,000. So if we just take that average United States loan amount here in the first quarter of 26 at $385,000, if the interest rate on your home loan was 5.875%, that would give you a dollar amount payment. I don't have the change noted here, but of $2,277. Now, if your interest rate was 6%, it jumps up to $2,308. So we are talking about a 1/8% variance to your interest rate, 5.875 to 6%. That equates to about $1 a day. Now, if rates move a quarter of a point, 3/8 of a point, half of a point, there's a lot of relativity there because that dollar a day now becomes $2 a day or $3 a day or $4 a day. But my point on sharing this with you is that if you are considering purchasing a home, and understand within the mortgage lending industry, there are a lot of kind of finite lines in the sand as far as what your debt ratio can be and how much your monthly housing payment can be relative to your income. So there are some elements here that don't really come into play as they do in other industries, such as when you're financing a car or applying for a credit card. But my point on this is when you're talking about your number one, for most people, largest monthly obligation, which is your housing expense. If an interest rate moving an eighth or a quarter of a point in an unfavorable direction is going to take you out of the home buying market due to affordability or pricing or monthly payment, then the reality is you may be shopping for homes at a price point that are beyond what you can reasonably afford anyway. Because if an eighth or a quarter of a point variance on an interest rate, which again, on an average loan amount of, let's say, 385, means that for a $1 or a $2 a day variance in that monthly payment is going to cause you to put the brakes on, or conversely, going the other direction. If a quarter of a point drop in the overall interest rate environment and saving $2 a day on your housing obligation is enough to make you, let's say, actively re-engage in pursuing your next home purchase, you might be shopping for a home at a price point that comes with a monthly payment that is beyond maybe what it should be for you. Again, as a consumer, I fully appreciate the value of every dollar coming into and out of your household. I'm never going to devalue even a penny because pennies add up. If you're comparing cell phone providers or internet providers and a couple of dollars a day or a few dollars a month lead you to one versus the other, that's reasonably understandable. Most of us, as a diligent consumer, are going to explore our options when it comes to anything that we're going to sign up for, invest in, borrow money for, etc. But when it comes to that primary housing obligation that you have, if $30 a month or $31 a month is going to influence your decision to purchase or not purchase a home, aside from what any lender may or may not be able to offer you as far as your qualifying, you as the individual may very well want to really dive into your budget and do a personal assessment of what is comfortable for you. And again, I'm bringing this up because of the bold font face and these headlines that are like, oh my goodness. So yeah, rates have moved up a little bit from where they were a few weeks ago in light of what's going on. And like some of these headlines, it's literally like the sky is falling. So if $4 a day is a life-altering move on the average cost of financing for a home, and the sky is falling because of that, I'm kind of at a loss for words. If you currently own a home and you have an interest rate that is up at a level where you're considering refinancing to improve your cash flow every month, or you're looking to consolidate other debts and pay off some debts through the equity in your home, then those little variances on the interest rate, they could be a deciding factor as to when to pull the trigger on making that transaction go into play for yourself. But on the home shopping, the home purchasing angle, again, if $1 a day is going to change your personal mindset from I am an active home shopper in the market to I'm going to sit back and wait until things get a little better, I am going to ask you to truly evaluate your situation, because again, while we as a lender may be able to make the numbers work for you, or we may be able to get you qualified, if that little bit of a monthly payment variance based on just an eighth or a quarter of a point in interest rate movement is enough to make you reconsider what you do or don't want to do, I just personally feel that you're probably shopping at a level that is beyond what you're comfortable with anyway. If saving $1 a day makes you feel like, okay, I can pull this off and we should be able to make this work, but then you lose that $1 or $2 a day based on a little bit of adverse rate movement, the reality is you're probably at a level that isn't going to work for you and your family, because there's the analytical and the reality in terms of the details on what the lending industry will allow someone to borrow relative to the numbers and the dynamics within their household. But the more important part about financing something as significant as your first home or your next home is, does the payment and do the terms of the financing work for you? So I'm just going to put it out there that if a little bit of movement in the interest rate environment has you second guessing your decision to be an active buyer in the market or not, please take the time to do a deeper dive on your actual cash flow, your take-home dollars, your other life expenses, your overall monthly budget, and just make sure that regardless of what any lender, bank, or broker may be able to do or offer for you, make sure that you're looking at this as to whether or not it makes sense for yourself. And the person that you're working with in that financing space should be taking into account and asking you whether you feel this works for you as well. It's not always just about getting a deal done. It's about making sure that what we are doing for you works for us from the approvability and the compliance side of it, but also, and again, more importantly, does it work for you? Thanks for watching. Make it a great day out there. If you are not living in Florida or Southwest Florida at this time, and that is something that you would like to consider doing or are in a position to do, or you're already planning to do, anywhere in the state of Florida, if there's anything that you might need in the way of financing help, financing assistance, even if you just have some questions about what's going on in the world of mortgages right now, feel free to reach out anytime. Thanks for tuning in. Make it a great day out there. I'll look forward to seeing you in future videos, and I hope wherever you are right now is allowing you to enjoy as glorious of a day as I am right now. Take care. We'll see you again. Thanks for watching. Well, hey there. If you are still with me, I truly hope that whatever the reason may have been that you just watched this video gave you some needed information, or you found even just an ounce of value within it. If you are looking to relocate within the state of Florida, if you are looking to move here from elsewhere in the country, please do not hesitate to reach out to me, whether or not, as I have mentioned in my videos pretty regularly, I am a mortgage lender, but whether or not you may need mortgage financing, I would be more than happy to introduce you to anyone in my circles and my professional sphere of influence if there is anything that you may need here, especially in Southwest Florida or possibly elsewhere within the state of Florida. I have contacts throughout the state. I can't say that I know someone in every city, in every town, but I am sure if there is something that you need, I may be able to reach out and find a reliable resource for you. If you have any questions about mortgage financing, that is what we are here to help you with. So whether that is understanding the differences between an FHA loan and a conventional loan, if you're a first-time home buyer, or if you're an investor and you're trying to understand the nuances of a DSCR loan versus a standard qualifying loan for a rental property, I am more than happy to answer any questions and help and guide you in any way that I can. Whether or not you are thinking about doing something in 2 weeks, 2 months, or 2 years, don't hesitate to reach out. I'm here to help you in any way that I can and to be a resource for you. Thank you very much for tuning in. I appreciate you watching my video. And if you would like to see future content, please go ahead, subscribe, hit the little notification bell. And if there is anyone else you know that you feel might benefit from the information in this video, please feel free to share it with them. I am here to be a resource for you. I'll look forward to seeing you in future videos. And if there is ever anything that we may be able to assist you with, I look forward to hearing from you. Reach out via phone, text, email, Calendly link. If you want to do a Zoom call or a phone call, whatever works best for you, happy to accommodate. Take care. Make it a great day. Thanks again. And purely for compliance purposes, this is Matt Pfeiffer, NMLS ID 296861. I am the Fish and Finance Guy. Thanks again. We'll see you in future videos.